Yes, sir. We back with another episode this week. Happy Monday. I'm glad to be here. Man, I'm on break right now, so it's a good feeling to, take a rest from some things. Got some time to get into the lab. I actually made a song yesterday, so we're gonna see how this one turn out when we start mixing and mastering it. But as you can see, we on the computer this time, so you know what that means. Like I said last week, we're gonna be going over support and resistance zones, and we're gonna look at a few charts. I'm gonna show you some technical indicators I usually use when I'm charting my entries, when I'm looking at the market to see what's going on. So it shouldn't be that long, shouldn't be that difficult. Hopefully after this video, you're able to understand more of what to look for in the chart, how to understand charts, signals, indicators and whatnot. But we're gonna go over all that. So before we begin, you already know what the deal is. Make sure you share this channel, share this episode with a friend, please. Family member, make sure you don't just watch it by yourself. Share it with somebody. You can hit the share button and be like, man, look, tap in with my bro, tap in with dude, tap in with him, man. He got some information he's sharing. So please do so. Please subscribe to the channel if you haven't subscribed already. And please like this video if you love the information that I'm giving. But other than that, we're gonna get started. Excuse me if my voice is kind of, I've been yelling because I've been recording. You know, you got to record with energy if you want the songs to come out nice. So I've been yelling and screaming all night. And part of today, I might get back at it right now as soon as I'm done with this video. But we're gonna go over technical. So of course, the main indicators that I like to use are indicators that are not lagging. And I'll tell you what that means in a minute. But basically, you have different indicators like moving averages. You can use Bollinger Bands. You have different indicators like volume, RSI, and I'm gonna go over all that. But a lot of the indicators like moving averages, they're basically the price action over how many days you set it. So if you set a moving average for 20 days, if you set a moving average for 50 days, that's going to be the price action of that specific security over 20 days, the price action over 50 days. There's calculations that go into it. I don't want to get into the equations and mathematics that go behind the moving averages, but let's say if you pulled up a moving average for 50 days on Microsoft, a moving average for 100 days on Microsoft, then it's basically going to get the price action throughout those 50 days, and then it's going to show you the line and the calculations. Same thing with the 100-day. And the reason why I say lagging indicators is because these indicators are considered lagging indicators. They have to get data. They have to get the price action over a specific amount of time. And then once it has that data, then it's able to show you, okay, the moving average on here for 100 days is here at this point. So those are usually lagging indicators. They still work, but it might be behind for a little bit. So the reason why I like supporting the resistance zones is because you can map those out without any lagging indicators. So again, support zones are where you have a lot of enthusiasm for buyers, and resistance zones is where you have a lot of enthusiasm from sellers. So supports you can think of as floors, right? So let's say you're standing on the floor, that's your support. So you have prices, let's say they move up and they come down and find a balance or find a support zone of where buyers step in, they show more enthusiasm than sellers, and they push their prices back up because their bids are so high. That would be considered a support zone. And as those prices are going up, it hits a high and it comes down. When it hits that high, that would be considered the resistance, also known, you can call it the ceiling or whatever you want. So prices have ceilings, they have floors. So, and a lot of times your previous resistance will become support now. So, and I'll show you the reason behind all that. But again, the psychology behind that is because, of course, you have your investors who buy at bottoms, right? So you have investors who are usually savvy investors who buy at bottoms. They don't get scared when they see a lot of red in the market like we saw today. So you have a lot of investors who buy at bottoms. And as the security keeps rising, you have investors who are buying in the middle, and you have investors who are buying at the top. So investors who bought at the top, let's say if that security starts falling, it's psychological meaning behind it, because they don't want losses. They don't want to have losses in the security that they're in. So once it hits the top and the price keeps falling, they're like, nah, I don't want to take a loss. So they're going to wait until it comes back to that previous high where they bought at, and they'll sell. And what happens when you have more enthusiasm of sellers? Again, it's going to hit that resistance and come back down. And then buyers are like, oh, I missed the opportunity last time to buy at this price. So let me buy at this price again once it gets there. So that's why it's significant that support and resistance zones can be mapped and charted out on the specific security or index that you want to look at. And another way you can tell if it's a heavy resistance or support zone is to look at volume. If volume is increasing every time it hits that specific zone, then that's how you know that it's really, really significant in terms of the support and resistance zone for that specific security. So again, if you have prices when they hit a ceiling, you have a lot of selling going on, you'll probably see volume go up. If you have prices that fall to a support zone, you'll probably see volume going up because buyers have stepped in and pushed their bids up. So let me just share my screen to show a few examples for you. So right here, I put up the SPX, S&P 500 index, and this is a daily chart. Now, I promise you, I'm not just putting any red lines anywhere. These are actual lines of which I've mapped out. So let's go over this first top line. It's at 47.16, this first red line here. As you can see, it hit this resistance once, twice, 3 times, 4 times, broke it, but it came back down. So that's 5, 6, got it close to it, 7, 8, and then it came back down. So as you can see, this is a heavy resistance area for the S&P 500. And you can look at this by how many times it touched that ceiling and came back down. So you probably have a lot of investors who bought at the top here and they're scared. They don't want to take their losses. So what happens when it hits that zone? They sell and it comes back down. Now, the second line that I mapped out is also known as a support area. The reason why I put it as a support area is because previously it acted as resistance. Now, it doesn't always have to be an exact price. It can be zones. It can be, around it. It doesn't always have to be an exact price. So let's see this second line here, right? It acted as support once, twice. It came and broke it, excuse me. It came and broke it here, but it came back up. So that was twice. It came here 3 times, 4 times, 5 times, 6 times. So it acted as a support level 6 times. 6 times. And remember, previous support or previous resistance becomes support and therefore. So as you can see, I'm already mapped out the third line here at the bottom. This was resistance here at this line on October 26th. It came resistance for the market. So what happened here on this candle? Found support here, bounced back up. Then it came down. And what did it do here? It found support at this exact line, came back up. And look at this. Its resistance was right at the line that I mapped out earlier. So it came here, found resistance here, and it came back down. And once it breaks one floor or one area, you have to kind of try to map out where it's going to bottom at next. And that's where I put the fourth line here. And I found this because this was resistance here. And it kind of found support here a couple times. And again, it's not always an exact price point. It's a specific area. And these are just to show me, okay, where would I want to set my buy points at? Where do I want to set my sell points at? And again, it's not going to always be exact, but it's better than just investing blindly. So if you're looking at the charts, you can be like, okay, I'm looking at these here. And if I comes to this support area, I will put in this amount of money. And then if I get to this resistance area, maybe I'll sell something if I'm looking, to trade short term or something like that. So these are just indicators of what I use to look into getting specific securities. Again, it's not going to always be an exact science. As you can see, it breaks the line a couple of times. It comes down lower than what you mapped out, but it's still giving you a better idea of what to do and when to do rather than just investing blindly and not knowing what's going on at all. Now, something else I wanted to show you was, let me see if I have anything. So I also have the moving averages mapped out here as well. So this white line is the moving average over 20 days. This purple line is the moving average over 50 days. The yellow line is moving average over 100 days. And this orange line is moving average over 200 days. At the bottom here, you have an RSI indicator. And this is basically a indicator of what's telling you if something is overbought or oversold. So as you can see, you have a range from the RSI. You can do 5 to 90, you can do 30 to 70, it's up to you. But the higher you get, the more overbought you are. So anything over 50 is considered overbought. Anything under 50 is considered, or under 30, or however you want to map it out, is considered oversold. So the closer you get to 5 or 0 at the bottom here, this is considered oversold territory. And the closer you get to the top, or 90, the closer you get to 90 is going to be overbought, right? So as you can see on the SPY, the S&P 500 ETF, we're at 43 levels on the daily chart. So it's kind of oversold, right? And you can see that here also with the moving averages, it finds support on some of these moving averages. So this 100-day moving average, it touched it on September, it touched it in beginning of October, and it's getting close to it right now. It's almost there. It's at 450.70, and today it touched around there, I think, about 450 with some change, got close to it. So again, if you're looking for entries and you kind of zoom out and you see how many times it's touching this 100-day moving average, you can kind of find buy zones. So if you know that, let me look at it on a weekly chart to give you kind of a better view. So if you see that it's a lot of support here on the 20-day moving average on the weekly chart, it wouldn't be smart for you to buy here at the tops if you know that it usually comes back down to this 20-day moving average. So if you would have bought here at 473.54, which is the high, I mean, you know that it's coming back down to this 20-day moving average. And look at where it's at right now, right on that 20-day moving average on the weekly chart. And look how many times it comes back there over the years, right? And it's just keep finding support. Again, it's not going to be an exact area, but it gives you an automatic advantage of when you're looking to buy specific securities when you're getting into the market. And just note that every security, every stock is going to move different. Every stock is going to move different. So here, I mapped out resistance zone here at Apple. So Apple created a new high December 13th, the week of December 13th, right? So I'm like, all right, it created a new high. I doubt that it's going to come back to these previous levels of support and resistance that I had mapped out, unless there's like a stock market crash or something. So I had to be realistic, and I'm like, okay, what is the next level Apple might drop to from 182, right? So the last high that it created before 182 was this resistance zone here at 157.43. And then prices got rejected back down to the bottom, right? So 157.43, and look at these weekly candles. It came here, found support at 157.43, and on this week, it found support at 157.43. So if Apple continues to fall, a price that I want to get Apple at is 157.43. And if we look at it on the daily chart, it'll kind of give you a better perspective. So what I usually like to do is, if I want to find resistance and support, I'll first look at a weekly chart. So every candle is going to represent a week. And then I'll map out support and resistance. I'll even look at it on a monthly chart sometimes. It kind of gives you a better perspective. So monthly charts, you can actually see where support and resistance are. And then once you have that perspective, you can really zoom in on the daily chart to see, all right, how many times did it really touch these support and resistance zones, right? And again here, so you can see at these lines, volume is kind of expanded. Volume is expanding on a lot of these lines, right? Let me go back to the SPY to show you a better example. All right, so look at this. So every time it hits like that 100-day moving average here, volume is expanding. Look at this. Volume is starting to expand, right? And again, this is just basically showing you that this is a heavy support or resistance area, right? So again, it hits that 50-day average, volume is expanding. Hits that 50-day average, volume is higher than other days. So this is basically confirming like, yeah, this is the really support area. So if I know that the SPY is at a high here, I'm not going to buy up here. I'm going to wait till it comes back down to the support area so I can get an automatic advantage of 10 to 15% in profit in about 2 or 3 months. You know, it's kind of giving you an advantage instead of buying at the highs. Now, if you're a long-term investor, you're not really worried anyway if you're buying every month, but this is just something that I like to do. Let me pull up another one. Let me look at, what do I want to look at? Let's look at Microsoft. All right. So again, I have my zones mapped out. This was resistance for Microsoft around 339.11, around 340, let's just say. Hit resistance here once, twice, broke it for a little bit, but then look, came down, tried to go up again here, hit resistance, came here close to it, but 3, 4, 5, 6, real close to it, broke it for a little bit and came back down. So my next level of support that I have, which was previous resistance here, is for Microsoft 306.33, right? 306.33. So it was resistance here, and look how many times it found support on this line here. 1, 2, 3, 4. Got close to it 5 times, but let's just say 4. So it's heavy, 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 heavy support here at this 306 level. And if Microsoft keeps falling from its high from 349, 306 would not be a bad buy at all. Would not be a bad buy at all, 306. But you also have other support areas like the 100-day moving average, like this yellow line right here. Look, it touched it here, it touched it here, it touched it, got close to it here, touched it here. And again, every stock is behaving different. And this is going all the way back to what, 2020? So look at this, it's touching it here. This is the way Microsoft usually behaves. Now, in rare cases, it'll drop all the way, which is in a stock market crash. But look how many times it's touching this yellow line. So if I'm a investor into Microsoft and I'm looking for some entry points, you just got to see the way the stock behaves. So if you know that it usually comes to the 100-day moving average, look how many times it touched that 100-day moving average on the daily. Look at that. So if I'm no Microsoft's high is 349, 311 would not be a bad buy. 311 would not be a bad buy at all. Look at this. Let's look at it on the weekly chart to see if we can get a different perspective on it. Wow. So even this 20-day on the weekly, look how many times it touched the weekly day, I'm sorry. Look how many times it touched the 20-day on the weekly and bounced back up. I can't even speak right now. I'm so excited. Look at this. Literally over the past 5 years, this 20-day moving average on the weekly is hella support for the Microsoft. So again, if I'm looking to get into Microsoft, this is another way you can get in. If the high is 349 and the weekly, the 20-day on the weekly is 313, 313 would not be a bad buy. 313 would not be a bad buy, right? Now, me personally, I'm gonna give away something that I don't usually talk about. Again, as I talked about a couple of weeks ago, the spreads on the treasury yields, I got to check them today, but it's at low levels. Last time I checked, it was at 0.75. And if we keep dropping lower, there is definitely going to be a stock market crash. I guarantee you. There might be a slight recession scare, but there's definitely going to be a stock market crash if we continue to drop on those spreads. Why? Because investors are betting short-term interest rates are going to fall. And they usually fall because of a recession. You could go watch the episode a couple of weeks ago I did if you need more insight on that. So if we have another stock market crash, if we continue to drop on the spreads, on the treasury yields, I'm already mapping out my entries of where I would get into a lot of these stocks. So I'm looking at what happened last time we had a stock market crash, right? This is on a monthly chart. As you can see, good stocks rarely touch their moving averages on the monthly chart. I'm gonna just show you a different few stocks. So Apple, Microsoft, it rarely touches the moving average on the monthly chart, right? Touched it here, touched it here. It rarely does that. It only does that literally when there's a crash. Let me even show you Google, right? So this is what happens when the treasury yields spread continues to fall. Every time these drops happen here, the treasury yields told us that it was going to happen. It told us that a stock market crash was coming. So if you look at Apple, Google, Facebook, let me get one more. And what's another good one that I like? I have Apple. Let me see. Let's try NVIDIA. I wouldn't really trust NVIDIA, but we'll just keep it at Microsoft. So again, good stocks rarely touch their moving averages on the monthly chart. If you can get in on a monthly chart moving average on a good stock like this, oh, you would have one of the best entries ever. So me personally, if the stock market crash were to happen, I would look in to get in on this 20-day EMA on the monthly chart. Because this is what happened in March 2020, and this was like 2018, what happened when the treasury yields was falling. It was telling us that the stock market crash was coming. So if I'm looking to get into Microsoft, if the high is 349, oh, best believe 255, I will put every single dime I have into the market. Savings is getting in there. I'm breaking piggy banks. I'm robbing the banks. Like everything is going to go into Microsoft, Apple, Google. I really want to be a shareholder of Google. I really want to be a shareholder of Google. So I'm already trying to map out my entries. What can happen if it declines? How much percent would that be? I already have like a few support and resistance zones, but man, if y'all can look at the monthly chart and see how many good companies actually touch the EMAs on a monthly, it's very rare. It's very rare. So if it does that, that would be a good buy. That would be a really, really good buy. So if you're looking to get a lot of things on discount, this is just something that I wanted to show you. And again, these indicators are lagging. So support and resistance zones would be a little bit better if you're looking to get into the market. But I just wanted to show you a little bit something like this. And the reason why I want to be a shareholder of Google and Apple, I'm gonna speak on it because they were recently in the news. If you've seen Apple, they've been filing a lot of patents for that self-driving autonomous car that they've been looking to build. And the designs that they showed us, they had like displays on the vehicle of to warn drivers around them that the car is in self-driving mode, that nobody's driving the car. It's going to like display on the windows that it's in self-driving mode. It might even display a couple things like the weather, when it's about to break. It's a lot of things that they're ideas that they're throwing out there. But again, some of it might be distracting if you're on the road and you're looking at it. It might cause more accidents. But again, they're just all ideas right now. They've been filing a lot of patents with the autonomous driving cars. And of course, Google already has Waymo, their artificial intelligence for driving self-driving cars. And Google was recently in the news because they know if you were a subscriber to YouTube TV, you weren't able to have access to a lot of the Disney channels like ESPN, ABC. And that's because Google and Disney were struggling to strike a deal. But recently, I don't know if it was yesterday or Saturday, they actually came to terms, and Google actually is giving YouTube TV subscribers $15 in credit because of what happened. They had a blackout for a few days. So I'm looking to be a shareholder with Google, advertising company, artificial intelligence company. They make so much revenue from their Google search. Of course, YouTube, I'm a big fan of. That's why I post on YouTube every week as well. And then you have their cloud, which they're not really dominating. You have AWS, Microsoft Azure, I'm sorry. That's really dominating the cloud spaces. So hopefully Google can find some ways to gain a competitive edge in that market. But other than that, hopefully this video is very helpful for you. Hopefully it was insightful. You can use RSI, you can look at volume, moving averages, but you always want to use indicators that are not lagging. So support, resistance, and other things like that. Be on the lookout for some new music soon, new music videos soon on the way. I got some special announcements coming up soon. So I'm glad that you tapped in with me. Please share this video if you haven't. Like, subscribe to the channel. We out.